All right, let's get right into it here. Market is up 0.9% on the S&P, and with that move, market makes new all-time highs here. This is a historical high, 520, 42 here, 48 here. As you can see, this is the historical level. We've never seen this market reached this height of the market here. And looks like the bull run continues. Looks like NASDAQ is also up. Semiconductor, every single indices are up. All these giant tech stocks are up. Bitcoin up, Riot, MSTR. A lot of these guys are also gold, silver. Also, only thing is down today is pretty much VIX. Treasury bond is flat. In tonight's analysis, we're going to do a special analysis for you guys. We're gonna look at Spider, S&P 500 Spider here, and NASDAQ, Semiconductor, Bitcoin, and gold. We're gonna look at the big picture, right? So we're not gonna tinker around with the 65-minute chart here that I usually do analysis for you guys, but we're gonna look at daily chart. We're gonna go all the way back to the 2009 lows. And we're gonna look at the primary, the secular trend of things. It is all coming up right now. All right, we're back. We're looking at Spider, S&P 500 ETF here, daily chart, going all the way back to 2009 low here, as you can see. And that was when Spider was trading at 68.31. As of today, Spider's at 520.48. We've reached the historical level here. And I think one of the biggest thing, I think traders and investors, they have a really hard time differentiating is, are we in a secular bear market, or is this just a correction within a secular bull market? And that's the biggest question, and that's where majority of market participants have hard time differentiating it. Like, they don't understand what constitutes like a real recessionary bear market and what is a correction, right? And I think that's why since 2009 lows, technically speaking, when we look at secular trend of things, we were never in a secular bear market. Perfect. Of course, we've seen some steep declines, such as 2020, right? That was a 35% decline. And then 2022, 27% on Spider. And all of those declines we've witnessed since 2009 lows. We saw in 2011, 2012, 2015 and 16, 2018, 2019, 2020, 2022. All of those corrections are corrections. They're not a real, true recessionary bear market. They were merely a corrections within a primary and secular trend of things. And because of that, these sharp declines right here and here, those were tremendous opportunities for those who understand these things. Perfect. Right? Back in the day, I don't know if you guys remember, back in 1980s, 20 to 25 corrections on the S&P was known as a healthy correction. We just don't have the patience anymore. You see, we've entered in this microwave era where everything's instant. Nobody has patience to go through corrections, look for opportunities, and build their portfolio, because those corrections will give you the most opportunities for your portfolio. And obviously, just looking back on every corrections, looking back every correction, 2012, 24, or 2011, 2012, 2015, 16, 2018, 2019, 2020, and 2022. Every single corrections were not easy. None of it supposed to be easy. Market always follows the majority. And you've heard me saying this. How many times? Some of you have been following me on social media since 2016, 2015 lows. Right? Market always follows the majority. And yet again, we're at 520.48 as of today. And now the market is seemingly going straight up and doing something it has never done before in historically speaking. Right? The buying pressure we have not seen since the October lows of last year. And that's here. And this is where we're at. The market has gone vertical. Something we've never seen. This market, so bullish. My micro term on the daily since the October lows of last year has not been breached for nearly 5 months. And I've been talking about this. As you can see here, that's the micro term. That's the micro term on the daily, micro term and micro term. That has never happened. Not even if I go to (2021) or 2020 to 2021, and we know, we've witnessed pretty bullish move throughout. Since the 2020 lows to 2021, 2022 peak, right? Even then, you see how micro term gets violated here, gets violated here, gets violated here, right? It gets violated several times throughout the move. Gets violated here, 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 gets violated here, gets violated here, here. You see how it gets violated. So, micro term not getting violated for nearly 5 months. This is something that we have not seen, anything ever. When the majority, right? Because data's out there. If you're looking for the data, it's already out there. And so the market must always follow the majority, right? How is it going to continue to do that if everyone has data, historical data, right? And then and trying to get an edge and trying to predict what this market is going to do. Well, market has to find a way, maybe possibly going all the way back to 60 years down the road, to do something that it has never done before so it can continue to follow the majority. The problem is, ladies and gentlemen, I've been saying this since 2016. Problem is, there's so much garbage out there. All the things. This is a reason why, again, I'm saying this for the millionth time. This is a reason why all the bearish posts, all the gloom and doom bears, the crash callers, since 2012, what I've seen, they always get the highest engagements and highest follows because the market or the people constantly flock to it. Right? Can you imagine? Just 2020 lows, during COVID lows, just 4 years ago. 2020 lows, Spider was at 180. Pardon, actually 220. Pardon me, 220. 2016 low was 180. 2016 low. Yes, 2016 low was on 180. 2020 low is 217, 220 or something like that. Just 4 years ago. It's at 520. Right? The problem with, you know what I'm saying? If you're so fixated with valuations and all these fundamentals and narratives and yield curve arguments, inversions, and whatever charts and things that you're going to gather through social media, and everyone's going to flock to it, that this market is overheated. This market is going to crash down. So people have been saying this for 10 years. Don't you understand this? And yet market goes higher and higher, higher. And the problem is, if you thought that this market was up too much during 15 and 16, when market was 200, when SPY was 200, well, you're out of luck, ladies and gentlemen. Because if you thought this market was overheated, this is way overheated. Can't possibly go any higher at 200, which I've heard. Same thing I heard during 300s. Then you're out of luck, my friend, because it's 520. Because there's no way you're going to start going long. So every time you're fixated in this idea that fundamentally this market can't go any higher without Great Depression, 1929 Great Depression is upon us. We're on a Titanic, which people have been saying during 2015 and 16. There's no way. Because every steep corrections, you're going to deem as this is it. 2020, this is it. This is where it's going to crash the market. And this market is going to never get back up for the next 10 years. That's what I heard, 2020, right? Great Depression 2.0 was 2020. And yet we've seen the biggest V-shape, the baddest, fastest V-shaped reversal this market has ever produced in history was 2020.
Perfect.
And 2022 happened, right? And definitely this was it. Now the bubble has popped. Right? That's what people are now. Bubble has finally popped. Not understanding that the bubble has just started. You
have to understand, most of these people are not ready to be unplugged. And many of them are so inert, so hopelessly dependent on the system that they will fight to protect it.
This is what I've been saying here. As you can see, this is comparing to 1995, 1996. Because I believe the run we're witnessing today is very similar to what we witnessed in 1995 and 1996.
Perfect.
Because during 1995 and 1996, what we've seen was very minimal corrections along the way. Right? So I'm talking about 1995 here. What I'm saying was, did you know S&P 500 went straight up without a 5% correction during January 1995 to December 1995, 12 months. Can you imagine? Can you imagine Spider going up for the entire duration of 12 months without a 5% correction? That's what happened in 1995 and 1996 for 12 months. S&P 500 went straight up without a 10% correction during January 1995 to June 1996. That's 18 months. 18 months. And why did I think that 2024 was very similar to 1995 and 1996? Because regardless of what you think, we've had a difficult year after difficult year after difficult year. Most people don't realize this. Me, not only I'm a position trader in this market, I'm also a long-term investor. I'm holding things. I became a long-term investor, right? To invest in this long-term. I've decided that I've learned in my own research, in my own market analysis, my own, that this market secular bull was born in 2015 and 2016 levels. That was when Spider was at 180. This is when I started becoming a long-term investor. Before, I was just a swing trader and a position trader. I started accumulating to hold long term. What does that mean? It means I've held through all of this and I bought every single dips. My Traders Club members can vouch for this. Every single dips. Because I've done this, I know. Maybe you don't know. Maybe you think we're in a bubble. But ladies and gentlemen, we were in a extremely, only good years we had was 2017 and then 2021. That's it. In the last, okay, going all the way to 2015, right? Now it's 2024. In the last almost 1 decade, only good year we've had, uninterrupted good year we had was 2017 and 2021. This move was what we call a recovery phase. So we cannot consider that as a good year because we've seen huge dive, right? So same thing 2015-16, the 2016 run is really not, we cannot look at that as a part of good year because again, we saw a very steep correction move. And then 2016 we recover, and then 2017 was result of that recovery. We saw that move. And then we started into really, really difficult year, which is 2018, 2019, just pounding it on us. You don't understand maybe because you're a day trader, short-term trader, right? You go in and out. Majority of people are like that. Somebody like me, I've gone through all this. I understand. Market's been pounding on the investors. 2016, 2017, right? And then 2018, 2019, 2020. And we had a tremendous run. I wrote it all the way from the lows all the way to the top. And then another 27 correction on the S&P 20 during 2022 and 37 on the NASDAQ. Biggest correction we witnessed during 2022. Obviously, as far as the numbers concerned, 2020 was bigger correction because it was 35%, but it recovered like that, right? It took 1 month for this market to come down 35%, 1 month, and it took 4 months to get back up. But what 2022 did, it took an entire year coming down. And when that happens, it breaks the investors. PBP, patience breaking point. Patience breaking point cracks. Patience breaking point cracks. This is how the market get rid of people before the biggest rally ever. 2022 was necessary because all the newbies that never invested in this market with the Robin Hood, they start coming in here. So 2022 was there. So that market can teach these people some lesson. That you do not come here as an amateur, as a novice, as a beginner, as a newbie. And you really think you can play around with us? With the sharks here? You really think you just come here? In my turf? In my territory? The sharks are speaking. And you really think you can just make money here coming in here? That's what 22 was. 22, it was there to shake you out. So all these people who are not capable of receiving the reward the market has for us, right? That's what 2022 was. To get everybody out. And the fear during 2022 lows, fear during 2022 lows was massive, right? Nobody anticipated anything like this. That is why, ladies and gentlemen, 1995, 1996 run is here. Because nobody expected to see anything like this. This thing could continue like this. This could very well continue. And we could potentially see 1995, 1996 fully playing out this entire year. So for NASDAQ, this is what we've been talking about here. So what is the ultimate target? What is the ultimate target for QQQ if 1980 scenario fully plays out going forward. So what I did was, as you can see, this is my post here last year. What I did was I measured it. There's a breaking rights here. I'm not just talking about 1982, 1983 just now that I see that NASDAQ is pretty much going vertical. Just so you guys know, I was the only one talking about 1982 and 1982 scenario back in 2022 October or something like that, when NASDAQ was coming down, as you can see right here.
Perfect.
But what I did was, how did I get that number, right? You might wonder, how did I get this number? Like, how did you get 650 and 700? So as you can see right here, what I did is on the Qs, I've done my fib analysis. This fib on this dip, that's a fib retracement. Right there, I know it's blurry and stuff, but that was a fib retracement, and then he went to where? 161.8% extension. I did the exact same thing on the Qs. This one actually came down to 50%. They came down a little more before it found support, and that'll get us to here, which on the Qs will get us to about 650 to 700, if this is true. And you also have to understand that you look at this, let's do this. If you look at this, how and obviously, where's Qs now? This was taken, where's Qs now? Where's Qs today? 443. Okay, so where is this? This was taken, so this was taken like when it was 433. So it's up a little bit more. You can see comparing to 1983, and this is today, 2023, 2024, you see that little dip. We didn't see that in 1983. See that? We saw a little bit of the dip, and this is a weekly chart of 1, 2, 3, 4, 5, 6, 7 weeks here during 1983 after it made new all-time highs. But we not seeing that right now, so it looks like market is rhyming, because in 1983 it did that after it cleared above the all-time high. But it looks like during 2023 and 2024, it did that before the new all-time high. So we are right now, what's going on right now in the market is pretty much 1995, 1996, and the 1983 full force. Full force.
Loose change. Holy shit! Ugh.
But what I wanted to talk about is actually NASDAQ just been finding support right here. Oops. Right on the support. It hasn't crossed up yet. As you can see, but it looks like if we do see a continuation tomorrow, for this to see a full cross. If we do see a full cross, that means it could look like this. It could look like that. And that was early 2024, like January. And it's been running for 4 months with fluctuations along the way, of course. So what we're seeing here so far is that, and this was what? I think this was, again, this 443. Okay, so it was, I think it was, I posted this maybe last week, recently. You can see, and this is a weekly chart, you can see these runs since 2015 and 16. And so we're looking at like a primary term trend here. That's trend, that's trend, that's a trend, and that's a trend, right? And then how do we know that was a trend, right? How do you know that was a trend? Well, we know because my oscillator, that's oscillator reset, that's oscillator reset, this is the weekly oscillator, that's oscillator reset, 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 reset. When it's trending, what does the oscillator do? It stays at the top of his band.
Perfect.
It stays at the top of his band. It stays at the top of his band. It didn't stay at the top of his band. It actually stayed at the bottom of his band during 2022, 2023. So what does it tell us? We're in a downtrend. Not a bear market, not like a recessionary true bear market like 2008 or 2000, but a downtrend within the secular trend of things, right? But you see how it does opposite. This is where an uptrend. That's an uptrend. That's an uptrend. That's a downtrend, right? That oscillator fails to get to the top of his band, right? And then finally we make a move, but instead of the oscillator going sideways like this, what does it do? It comes right back down, and that's an October low. So this is a great signal for long-term investors to accumulate, 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 accumulate.
I used to say, what if this happens? It's called the language of the poor.
Definitely 2020, you really had to do it fast. I think market only given you a week opportunity. That was it. And then the market, it just, you know what I mean? You were not able to get on that bull train. 2020, it happened so fast. Same with 2019. Gave you like 1 week, couple days opportunity to accumulate. Not just a little bit. I mean, that's a major lows. Market gave us more opportunities during 2020 and 2022 and 2023 because it was more lethargic. So you had an entire year to accumulate if you knew what you're doing. 2019 to accumulate there, right? So long-term investors who want to ride this primary term, this is extremely important signals that we want to pay attention to. But what I was really wanting to talk about was 2 year, 7 months run until the oscillator resets. 1 year and 2 months run until the oscillator reset. 1 year and 9 months run until the oscillator reset. And then we're on a downtrend because the oscillator does not get to the top of his band. And then 9 months run until the oscillator reset. We're only 4.5 months so far.
Perfect.
So just by going by this, we can see that this trend could continue minimum another 4 months, or possibly 2 years, or 1.5 years, with corrections and fluctuations along the way. We've already gone through some crazy dramatic downturn right here, so we're probably not going to see anything like that big. But we might see 10%, 15%, maybe even 20% on the NASDAQ. I don't think we're going to see something like 20 on Spider, but even NASDAQ, we might not see 20%, but NASDAQ and semis, you got to let them be a little more wild. They do go up crazy to the upside, so you got to let them be a little bit more wild to the downside. S&P is still a little bit more composed. So S&P, we're not going to see 20%, I don't think, this year, but NASDAQ, 10, 15%. There are people out there who's been calling for this market top for over 10 years. And they got the highest followers. And people still listen to them to this day. Let them do it. Semiconductor. Semiconductor's been hitting my fib extensions here, as you can see. So this is a long-term Fibonacci analysis. I measured it from 2018 low. Right, so I'm measuring, basically I'm doing like a primary trend, you know what I mean, retracement, which it got down to, okay, look, 2018 low. it, and then I measure it from to 2022 peak, because obviously looking at semiconductor, that's been the biggest decline we've seen on semiconductor sector since 2009. 2009 low. Look at this. Almost 45%. That's a huge decline. But you have to keep in mind, yes, we've seen some crazy drawdown, but man, semiconductor did this. Not a stock. Okay, the entire sector did 222% on semiconductor. So you gotta allow some 40-some% decline. So it came down to where? Measuring from 2018 low. 2022 peak, it came down to the last level of my fib. And we're just hitting 161.8% there. And that's a big run since 2022 low. Already 174% made a move.
Perfect.
Man, but it might not stop because you can see my oscillator. It's right there. If that does, cross back up. All right, so looking at the equities here, I want to continue to give benefit of the doubt to the buyers in the long term and the mid term and even short term. But in the micro term of things, obviously, as I analyze 65-minute chart for you guys, there's going to be fluctuations. All right, we're going to be looking at some of the, I tweet things out, looking at some overbought, oversold sentiment. This is a 65. So when I look at 65 minutes, I'm really looking at very much micro term, micro to short term. I'm just looking at what might happen a couple days. And that's not the analysis I'm doing right now. Right? Let's go to Bitcoin here. So you can see, first of all, yes, Bitcoin might have a little bit more room or something like that, but I would have to say after this kind of move, this is not a level. This is not a level to load up on Bitcoin. Unless, of course, you want to gamble, you're looking for another whoomp of another leg higher. If that's what you're looking for, maybe you could, but there's a lot of people. Because you can see even during, if you look at like 2021 price action, right? There can be one more whoomp of a move. So you see that there's a big bullish move, and then it comes down, and there's one last push, and then it finally crashed down, right? And it trapped a lot of people here, ladies and gentlemen, in this vicinity. 2021, 2022, a lot of people are buying this dip. They lost their entire life savings during 2022. That's why I remember what I said. 2022 needed to happen. 2022 needed to happen to flush these people out. Because all these people after COVID, amateurs who's never invested or traded in this market, they think they come into my turf, our turf, the veterans, the people who know what they're doing, the few, the sharks. 2022 needed to happen to get 2022 needed to happen to get these people out. That's exactly what this market has done. To punish, because they're not worthy. They're not worthy to receive the reward the market has for them. Market is fair. Market is fair in a way that market is going to reward only those few who truly deserve the reward. Market is going to make sure, if you've been getting lucky in the market is going to make sure to get you out. Not only is it going to get you out, it's going to take everything from you. That's what 2021, 2022 was all about. So, given that there was a one last, and again, I'm not trying to call top or anything like that, but all I'm saying is this is not a level. This is not a level. You start heavily loading. Again, unless, of course, you're short term, you're a weekday, couple hours, whatever. Then it doesn't matter. Nothing matters. If you're short term, you're day trading, nothing matters. You're swing trading, none matters. maybe one womb could be here. Possibly. That could get us to about 80s on grayscale Bitcoin. A lot of mining stocks, Bitcoin or crypto mining stocks are up today. Mara's up, CLSK is up, Coin is up, Riot is up. There's some mining stocks did participate with recent move. A lot of mining stocks actually did, but there's some didn't, such as Riot didn't. As you can see, this is the first time. This is Riot and Bitcoin overlay, and the Riot is green. You can see it participated with the, Riot participated with the Bitcoin. Riot participated with Bitcoin. Has not participated. I wonder, because even here it didn't participate. But man, can you imagine going through another 2 years though before it participate? So that's why I think like going into multitude of the crypto mining stocks, when you're buying these mining stocks, crypto mining stocks near the lows, right? You want to buy near the lows. You don't want to start heavily going long anywhere here. I mean, you can always add a little more or something like that on a pullback, but this is not a level you want to go long. This is not a level you want to go long. This is not a level you want to go. Even if this thing just goes vertical straight up, even if it does that, this is not a level you want to YOLO. Because again, people, they lost their entire life savings 2018-19. You always going to hear about somebody who made millions and millions, right? People do win lotteries, ladies and gentlemen, but you're not gonna hear millions upon millions upon millions of people who lost their entire life savings. This chart I posted on my X account. I don't know, it must have been when it was first breaking out. Obviously, you can see it's been going up for, I think it was a couple weeks ago. Or a couple weeks ago or something like that, I posted that. But looking at, this is 2023 or 2024. Right, this is 2024 today. 2010, 2020, 2007. This is a base. You can look at it as an inverted head and shoulder pattern, reversal pattern, inverted head and shoulder, inverted head and shoulder. Don't get too precise with this or too technical with that. All it is, because some people like, well, okay, the left shoulder has to be this measurement, the right shoulder has to be perfectly on this right angle and this way, and you gotta make sure it has to be this, you gotta measure it this way. That's not how it works. Inverted head and shoulder, all it is transitioning into from lower lows to higher lows. That's all it is. So there's no like exact formula for what the inverted head and shoulder is supposed to be. That's something that I see a lot on X. If you don't know, just don't speak. Why trying to go and like, well, the shooting star has to be this way. This is not an engulfing candle. It doesn't matter. It's a placeholder term.
20 minutes later.
Well, 2020 is wrong, K. That's not an inverted head and shoulder. Yes, it is. Higher lows. Neckline. Higher high. Reversal. This is not a head and shoulder pattern, K. Lower low. Higher low. Higher high. Boom. It's sideways here above the neckline. But I think today's setup on gold looks very similar to here. Here. That's what I think. If you look at it like this market hasn't gone anywhere from since 2011. It just pretty much, you can actually look at 2011 like a secular bear market. Yep, that's 45 to 50. Yeah. So gold has gone through a secular bear market. We're just now breaking out. The entire thing was a recovery. Entire thing is a recovery base. So I wouldn't be surprised to see some nice run here.
Perfect.
Right. from like 2010 to, what is that? Dang, that was a 2 years run. So end of 2011, early, late 2009. So late 2009 breakout, late 2011. So 2 years run with fluctuations. And these fluctuations could be, let me see. And these are all buyable dips. If you understand a primary trend, you'll buy some of these dips here. Yeah, like 13%, healthy. All those are buyable dips if you understand a trend. That's sort of what I'm thinking with gold, is that it's gonna get into a rally next 2 years with 10% corrections. And I'm gonna end with this. Some of you guys actually think that gold making a move like this is actually bearish for the market. It's the equity market. It's not. Remember, this gold broke out 2009. When did equity market see it? 2009, yes or no? 2009, you see it right there. Bottom, 2009, you see I moved this, right? 2009 low was when the equity market went spider. Every single indices bottomed after 2008 financial crisis. End of 2009. Equity market bottomed in 2009. Gold bottomed in 2009. It rallied pretty much together until 2011. So now, why can't you think that the gold can also break out here for the next 2 years and rally together with the equity market?